StockMentor.com. I am your stock mentor, Brian Johnson. And coming into a new week, things still kind of stagnant, still kind of sideways. It is interesting, though. I always take kind of a day off where after the markets close on Friday, do my videos, and then I don't usually do much with it until Saturday night. I have to start Saturday night to get everything prepared and ready for not only the daily videos, but then the subscriber videos coming into the beginning of the week. And anyway, it gives me a really good, much better perspective when I take some breaks and kind of come back to it. And after looking at a lot of charts this weekend, man, yeah, it just still has us in this sideways consolidation. I read you a couple of different lines to have you guys kind of follow coming into the new week. This is the one. This blue line here is really the one the bulls are absolutely looking to break. And we get back and above this blue line, and maybe we finish this little consolidation we've been working on. Now, the Bears did a good job last week of dragging it down, and the Bulls did not do a fantastic job of bringing it back up at the end of the week, which is what we had been seeing. If we skip ahead here to the daily, we had seen a lot of moves down only to be followed by moves back up again, leaving the Bears and the Bulls kind of in a big fight here. Finally starting to hit some of these lower levels. The NASDAQ really starting to feel it more than anything. But you can see just still this sideways consolidation. Let's see if this whole Japanese nuclear reactor news has anything to do with where we start tomorrow. Maybe it's just an excuse to get things going, but as you can see, the big move on Thursday was actually a very strong move, and what we saw on Friday from the Bulls was it just the participation just wasn't there. So the Bulls really need to drag this thing back up. We're now trapped between the 20 and the 50, and we can make this really simple. We're ultimately looking for a break above or below those particular marks. For the more conservative, you want to let it get a little bit deeper and above this 12,300 for your more conservative entries. But overall, we're just still trapped in that sideways chop. Now, the NASDAQ's been one that's been the lagger. It's been kind of beaten up a little bit more than the rest of the markets. Looking at a daily here, you can clearly see where we've come down into some lower areas, and we finally broke this 50-day, which I'd been mentioning to you. So, unlike the other indices, it's not stuck between the 20 and the 50. It is kind of hanging out down around these lower areas. Now, this candle can be construed as a bullish engulfing. Certainly something to watch once again coming into early into the week. Do we see a move up in the markets? And then watch to see if this holds on any kind of a retest within the NASDAQ. Otherwise, bad news could bring us into these lower levels. And then we're looking at these marks I have in the charts. I want you guys to keep your eye on that for the time being. There's a lot more detailed discussion going on within the subscribers video about what we saw here. It's all kind of playing out so far, but we just need some further confirmation one way or the other because we did not get it on Friday. You guys know I was looking for confirmation Friday from the Bears, and we did not receive that yet again. Even after we see these hard pushes to the downside, it just seems to get bought up consistently by the Bulls and then down. Now, in this case, down a little bit further. We'll see if the Bulls can't find some gumph and pull this thing back up again. From a weekly perspective, too, like I said, down then back up, but now down and not really back up. Just kind of holding down here at these lower levels, and this is ultimately why, even though we're still stuck in this sideways trading range, this is why we haven't quite seen the power that we have in the past from the Bulls. They never got it back up again. They seem to be losing a little bit of steam here, and any lower levels are going to be right around 2250-ish. I want you guys to watch that on the NASDAQ if you're NDX players. Otherwise, keep those upper levels in mind for your trades in the NASDAQ. And the SPX doing the same thing here, looking at what might happen on this Japanese news with the earthquake and the meltdown and everything else that went with it. Not a lot of necessarily people dying or destruction from it all. Not in great quantities anyway, so I don't know if that'll have any kind of an effect. I think it would more have to do with that nuclear meltdown or potential nuclear meltdown that Japan is now struggling with over there. SPX 60-minute, you can see we're still stuck in this wider trading range, though. A lot of these bigger areas held, and that is still here around the 1330 and down around 1292, 1295-ish areas. Those are still your bigger, more conservative areas to be watching. As you can see, this big push down by the Bears led to a very small up by the bulls. Just not a lot going on up here within the push to the upside by the bulls. And this is what it did. Came back to retest these levels right around this 1305-ish mark. Is above the 50, but not back above some previous support that was broken come Thursday. We saw numerous attempts here and here and here and here, and now finally a break and a hold. Still not all that bullish for sure. But because we're right back up to it, I cannot give my blessings to the bears, as it were, quite yet. So we are back above this 50-day moving averages, and those are the areas that I said the bulls would absolutely want to reclaim, and they did in most of the indices by the end of the week. And so as long as they hold those, they're in good shape. They're still in good shape. I really like what I'm seeing here in the VIX. This fear in the market has not subsided. We have typically seen this thing spike and then crash every bit as quickly as it spiked. And that is not what we've seen now the past couple weeks. It has held above this little channel we've been watching and above the 1920-ish area, which I've been on and on about for a long time now. So any fear this Japanese thing doesn't turn out all that well, we could see this really start to spike coming into early next week. That would lead then and should lead to lower prices within the markets themselves. Apple drew some lines for you to show you where we're at now. We're in a little bit of a downtrend here, keeping within this channel. So I think your lines are pretty well defined here. You're really looking for pushes back above here and or moves back below here if you want to make any kind of attempts to trade Apple from a daily standpoint. From a swing trader standpoint, the same is true here. This is right around 353-ish, the 20-day is. So right up around 353, 354, you might consider a long trade if things turn out to be okay with the whole Japanese and everything else we're seeing. What this is basically being stuck in now is a symmetrical triangle waiting for a break one way or the other for Apple. So yeah, continued bullishness in Apple gets it above that 354, 355 area, and that would not be a bad long entry in Apple at that point. Otherwise, back below the 50, you can see what we've been watching this whole time. Back below the 50 or back above about 354, 355 for your trades in Apple, as it also tends to wander sideways in a pretty big range right here right now. From the weekly too, holding this upper blue line, so pushes to the upside can get you 360 plus before you're going to bonk your head against this upper blue line yet again, and that is what we're ultimately waiting to see if the weekly will hold that for any length of time. So far it has. Look, we've had pushes above it 1, 2, 3 times, and they've all been led to the downside. And yet it continues to hit its head against it. So you can see the strength there. Took some lines out of FAS and FAZ that showed us in the symmetrical triangle. We're really now just kind of working our way sideways. It's been a very well-defined range now between this $29.60-ish and $32 range. Those are still my entries. So $29.50 for a short, $32 for a long. If you want to trade the middle of this, have at it. But you're looking to get your hand slapped, so be very, very careful with it. I would wait for a more prominent exit one way or the other within those two ranges that we were talking about. From a daily perspective, it's the same type of thing. We have the 50, we have the 20, and we're below both of them currently right now. So really below 29, 29.50 to the short side, and then back above 32 are still fine entries if you're looking for anything up or down within FAS. It has fallen, but it hasn't crashed by any means whatsoever. It's been a slow, gradual decline, keeping mostly within this bigger trading range that we've been seeing on all of the FAS and FAZ ranges. Here's that range in FAZ. So here we go again. Above 42 and below 38 are really your entries there. And for the daily, same type of thing. Very well-defined trading range right here as it's stuck, moving sideways, waiting for the break. I ultimately still like what I'm seeing from kind of a bullish standpoint here. I really do. I like this information. I like where it's at, and I like what it's doing right here. So, you know what? If you just want my gut feeling on this, I like this thing still to the upside if we can get back above about 42, 43, 42.50, 43 bucks. Yeah, I could see a very, very good potential long trade there within the markets. This blue line is falling. This thing has been holding. We're ultimately looking for a cross. Now, tomorrow, probably right around the 43 area, and as long as it stays within the range of 38 to 42, you can see that it continues to drop this blue line while the trading range continues sideways. We could ultimately see this blue line get down to 42 before that range happens. But once again, just breaks over and above those areas for the time being, 42.50 to 43 bucks. Really, I would go more conservatively with the $43 mark. And yeah, you could be looking at a pretty decent trade to the long side if and when it could get up there. So watch for that tomorrow. If there's any big violence in the markets, watch to see where we gap in the morning. Do we gap up or down, and where do we gap up or down? That could be very indicative of the day's trading. Overall, be cautious with your trades. All right, pulled off of last week's subscribers list. For those of you interested, we did a trade in CF. Show you that we were short below 130 and or 127.50, and my target was right down somewhere around the 122 to 125 range. As you can see here, we played it pretty well. This is, by the way, what you'll see in the subscribers newsletter. Lots of extra lines and lots of a lot more talks about what we're seeing and what could potentially happen in targets. I give you guys, my entry was below 130, and for those that missed that, below 127.50, and you can see we played that down for a very nice gain last week, making really good money off of this, putting stops down as we moved. I give stops and entries and exits and the whole bit and give you guys ideas of what to do. So you can see ultimately what it did was CF held this support right here. Now it's kind of in limbo, and I don't really have much to talk about when it comes to CF, so kind of took it off the charts again for the time being, but it is certainly one of my favorites that I like to come back to from times. We've played it all the way short, basically from top of this blue line as well. A lot of people have held from here. Not a lot, I should say. A couple people have held from a short I suggested way up here at this upper blue line and have done pretty well on that trade. But from last week, it was just below 130, and we played it down for a good 5 to 10 point gain. CVC was one that I had, but it didn't go anywhere. We were watching the symmetrical triangle, but it gapped out of it. It didn't move down and through it, so we had no trade on this one last week. This one didn't pan out for us, but it was on the list. It was taken off. I show you all of them, guys, because not all of them pan out. I'm not going to just show you, hey, look, we made a lot of money on this one. I'm going to show you it as it is. The truth just is what it is. And so in this particular case, we had no trade. We took no trade. It came off the list. Dries was one we watched as well. Came down into some lower areas, but we didn't break a lot of the bigger areas I was looking for, and that was below the 460 area and above the 520 area, trapped within this trading range. We got a gap down that moved right back up, but we didn't break these lower levels for a short entry. So no trade on this one as well. This one was just kind of a blah, waited for it to happen. Nothing happened. I was kind of looking to see if oil would continue to push this thing upwards last week. Obviously did not see that. Goog was one that worked out very well. This was a trade below 600, so we took this one short below 600. One of my targets was 590 on this initial trade from Monday. Some people took profits at 590, made 10 bucks off of it. Other people wanted to know where to put their stops. I had them out at 595. Some of them got out, some of them did not. Like I said, completely up to you once you're in the trade, whether you take my recommendations or not. Some people played this all the way down. I really thought this one had a good potential to fall a little bit further, so some people stayed in and played it all the way down. So it was good for a $10 or upwards of 20 to 25 bucks just last week alone. This was a very nice setup within Goog. I could not pass this one up. This one worked out very, very well. From a weekly, didn't quite reach this lower area, but we took profits when we had them at the end of the week in a very nice support area. So Goog worked out well for us last week, and Honeywell didn't do anything. This one's still wandering around sideways. I'm not going to wait for the break. I'm just not that patient of a guy. I've got some other really nice setups that I put on this week and need to take some stuff off. Otherwise, my videos tend to get a little long. My video for my subscribers is right around 15 to 20 minutes. You don't have to watch the daily if you're part of the subscribers list, because I go into a lot more detail on the subscriber side and cover most of what is covered in this one. So for the subscribers, you get a 15 to 20 minute video every day, plus the intraday updates that I send out, plus I include charts in those intraday updates showing you kind of what to look for going forward into the end of the day, allowing you better chances to plays. I give individual stock plays. I talk about other indices such as foreign indices and Russells and commodities and things like that within the subscribers video. So it's a lot more in depth. If you enjoy the daily, you will love the subscribers video. for $1 a day, it's the information alone. If you never take one of the trades, the information alone, I think, is worth $1 a day. Well worth your time. So click the link to the right. It's just an ad on the side of my site, or you can write me or call me if you don't want to use PayPal. Just want to write me a check, or if you want to do it over the phone, great. I can do it that way as well. All right, guys. See you again tomorrow night. Bye.